Okay, well, new information in an insider trading case, and we aren't just talking about Galleon. There's news about the man at the center of an investigation of Pequot Capital. Bloomberg's Jesse Westbrook covers the SEC and joins us now from Washington. And Jesse, how did this admission come about for this possible insider trader?
Well, this is a really unique situation. It seems if you work on Wall Street, be careful what you tell your doctor, your psychologist, and even maybe your dentist. We had an employee who was hired by Pequot tell his psychologist that he was fired after he stopped providing inside information to Pequot, and this information came public. It was part of a divorce proceeding. His psychologist testified that this is why he was fired, and it seems to point more of a finger at Pequot.
Right, and this is information on Microsoft that he was providing, right?
Well, he had been an employee at Microsoft, was hired by Pequot several years ago, and he is claiming that once he stopped providing information about Microsoft, future revenue numbers, et cetera, what kind of performance they were going to have in a quarter, he was cut out. Pequot fired him because he was no longer valuable to the company.
Okay, so subsequently let go. Well, then how might this all affect the SEC's investigation into Pequot and also to Arthur Samberg?
Well, the SEC has already been investigating Pequot and Arthur Samberg. They gave him a Wells notice, which is an indication that the staff thinks there's enough evidence there to bring a case. I don't know if this gets them over the top. They seem to already be heading in that direction, but it certainly puts pressure on the agency to go forward and perhaps bring its case, because there does seem to be some more compelling evidence that there was some perhaps funny business going on.
Funny business. Indeed, Jesse, and I can imagine this is going to be sort of another thorn in the hedge fund industry and their reputation, which they're already struggling right now. And this comes, on the heels of Galleon. How does this hurt their reputation even more?
Well, it runs the risk that it plays into concerns that hedge funds generally are not getting investment returns based on their knowledge of the financial markets and investment acumen, but rather they're pumping technology company employees and other resources to get inside tips that aren't available to the rest of the market. And that doesn't come at a good time for the industry when people in Washington are talking about enhanced regulation of the hedge fund industry.
Okay, Jesse, quickly, what is next on this whole case?
Well, will you just wait and see if the SEC is indeed going to bring a case against Pequot and Samberg, but we've been waiting for that for a while. It's sort of unclear at this point how this latest revelation affects that.
Okay, Jesse, thanks so much for joining us, Jesse Westbrook.